Well, today I'm going to talk about what is sustainable finance and why is it important. The financial sector holds enormous power in funding and bringing awareness to issues of sustainability, whether by allowing for research and development of alternative energy sources or supporting businesses that follow fair and sustainable labor practices. Sustainable finance is defined as investment decisions that take into account the environmental, social, and governance factors of an economic activity or project. Environmental factors include mitigation of the climate crisis or use of sustainable resources. Social factors include human and animal rights, as well as consumer protection and diverse hiring practices. Governance factors refer to the management, employee relations, and compensation practices of both public and private organizations. Sustainable finance, jobs on the rise, investing in businesses and projects with sustainable practices is already on the rise is on demand for finance professionals with expertise in this niche yet rapidly growing field. Bloomberg recently reported on the trend, stating that it is already one of Asia's most in-demand fields. Clients to understand that talent pool is very thin, particularly in finding candidates with a proven track record and relevant experience in both private and public sectors, said Arthur Lang, a consultant covering financial services at leadership advisory firm Egon Seger in Hong Kong. Quoted by Bloomberg Green, the understanding the reality of talent and most are willing to pay for the rules. Harvard Extension School offers a master's degree program in sustainability as well as 6 graduate certificates in the field. These programs aim to prepare the future workforce for a more sustainable future as climate change increasingly poses threats to public health. A recent report by the United Nations Intergovernmental Panel on Climate Change makes the urgent case for integrating among the factors into investing decisions for fast actionable impact on the environment. Kevin Hagen, Vice President on Environment, Social and Governance Strategy at Iron Mountain. Sustainable business thinking is a disruptive force in business. At one time, folks may have thought of it as marketing or storytelling. Today, the leaders in the space are demonstrating that thinking differently about environmental and social performance can drive change that delivers more business value while harnessing the power of enterprise to deliver better outcomes for people and the planet. If learning new sustainable business skills and competencies is making companies more successful, the same is true for us business professionals. Perhaps nowhere is that more true than in the accounting and financial world. For example, the accounting functions need to add skills for gathering, managing, analyzing, and reporting a whole new range of business metrics, such as greenhouse gas emissions, gender pay gap results, and ethics and anti-corruption indicators. Finance functions need to model renewable energy contract risks or the analysis of the basic vehicle conversion to energy efficiency to inclusion training for employees. Treasury teams need to understand green bond and how climate risk assessments might impact credit facilities or insurance considerations. In short, thinking is rapidly changing the job of financial professionals across the board, while that description could leave some folks behind. People who learn or help invent this new space are likely to help their company create more value, accelerate their own careers, and create the opportunity to use their day job to make a big difference in the world. Graham Sinclair, instructor of making the sustainable investment case. The future of finance is stakeholder capitalism. Companies can no longer operate by prioritizing shareholders as the dominant audience. Now employees, communities, customers, regulators, and the planet itself all require their voices to be heard. That means decision making needs to be fluent in integrating all factors, including environmental, social, and governance factors, when making choices about where to allocate capital. First, good practice has shifted to where it always should have been, valuing all forms of capital. Every business on planet Earth, directly or indirectly, relies upon biodiversity and natural ecosystems, but population size of mammals, birds, fish, amphibians, and reptiles have seen an alarming average drop of 68% since 1970. Historically, typical business behavior has centered on for-profit businesses seeking to capture as much profit as possible while pushing as much of the cost onto society and onto nature. For example, only 9% of plastics made are ever recycled. The reality is that all lives and livelihoods are made on one planet, relying upon humans to take, and the rules of law to protect two contractual relationships of all market participants will be implementing increased reporting standards soon. The Climate Action 100 initiative counts 5075 investors management $54 trillion. These investors are demanding their 167 portfolio companies, which account for 80% of global industrial climate pollution, to take necessary action. Second, investors are demanding more transparency and accountability from companies. Not less self-described branded assets are on track to reach $53 trillion by 2025, driven in part by demand from the increasing influence of women and millennial investors. The customer value proposition is changing. The increase in trillion-dollar investment firms with growing passive investment strategies that cannot exit stocks has also driven these professional investors to be better stewards. They are now looking more critically at management and engaging with companies to improve performance. BlackRock, Vanguard, Fidelity, and State Street Global Advisors together manage 20% of global publicly listed securities and aggregates $20 trillion assets under management at the end of 2020. These investors' dissatisfaction was significant in the paradigm shifting vote against ExxonMobil directors on May 26, 2021. Thank you. For more video, like and comment these contents.